Okay, so looks like we're live on Instagram, and then we're also live on Facebook. And let's go ahead and get live on here as well. So let me share the screen. So thank you guys for tuning in to this tax tips for entrepreneurs webinar. So each month we always like to do a webinar on a topic, for example, taxes. And overall, these are things that we like to do just to educate the community, educate folks, and make sure that we have knowledge when it comes to this topic of taxes. Now, one thing I do want to share is we did get a new president-elect by the name of Joe Biden. They're still battling it out in Congress and everything like that. But it should be expected that he'll be the president. And his goal is actually to increase taxes. So this webinar today, or this presentation, becomes extremely critical because we need to find ways to minimize our tax liability. So one of the core reasons why we're having this presentation today is in order to reduce our tax, basically help you reduce your tax liability. So today we'll be starting off with an introduction of who I am. Then we'll go into incorporation. So why you need to, before we even talk about the tax side of things, we need to make sure that your business is set up correctly. So we'll talk about different legal entities. And then we'll jump into the actual tax discussion. So why you need to file taxes, what are the deductions that's out there. And I'll also share with you some creative deductions as well. So that's one of the bonuses that I have for those that spend time to join us today. And then we'll talk about how to keep track of all your books and records. So we'll do a quick tutorial on QuickBooks and share the benefits. And then throughout, you can ask any questions. If you're on our Zoom platform, you can ask your question simply by typing in the chat box or unmuting yourself. You can feel free to cut me off at any time for any reason. I don't mind answering questions. And then if you're on Instagram, then you can go ahead and type into the chat box. And then if you're on Facebook, you can also type in the chat box. You guys can ask questions at any time, at any point. But at the end, we'll leave about 10 minutes. So at about 12:50, we'll cut off the presentation, and then we'll save it for a Q&A. So an introduction of who I am. My name is Jeff Badu, and I'm a licensed certified public accountant. I graduated from the University of Illinois at Urbana-Champaign with a bachelor's and a master's degree. And I'm a parallel entrepreneur and a wealth multiplier. I'm the founder and CEO of Badu Enterprises, LLC, which is a multinational conglomerate in the finance industry. Our main company is Badu Tax Services, LLC, which is a tax firm that does tax preparation, tax planning, and tax representation for individuals and businesses across all 50 states in the U.S. And we also have a client base in over 15 countries at the moment. So what we do sometimes is we partner with other accounting firms and the basically other accounting firms across the world, or we have ownership. We have direct ownership in some accounting firms overseas where we basically have a stake in those companies. So just to give you guys some insight as to how we became a multinational conglomerate. And on top of that, we have Badu Investments LLC, which is my real estate investment company, primarily. And we own and oversee about 57 units in Chicago right now. So that's our primary area of investments. And with that, we basically buy and hold multifamily residential rental properties. So primarily on the south side of Chicago. And our goal there is to acquire the building, improve the management, improve the tenant, basically improve the operations of the building so that we can add value to the building in order to provide stabilized housing for tenants and residents. So that's another company that I run. I call it on the side because 80% of my time, like business-wise, is spent on my tax firm, my accounting firm, and then 20% is spent on my other businesses. So I just mentioned we own and oversee 57 units, where I only spent 20% of my time across those businesses. And the reason why I share that is basically I started as an entrepreneur in 2016. So on September 2nd, 2016, I turned in my 2-week notice at PricewaterhouseCoopers, or PwC, in exchange for a full-time entrepreneurship ticket. So with that, I literally exchanged my 2-week notice for my full-time entrepreneurship ticket. I actually registered my company, my LLC, Badu Tax Services LLC, that day. So I turned in 2-week notice. And then on September 16th, 2016, because it takes a full 2 weeks, I left the firm, right? I went out in the woods, and believe it or not, guess what I started doing? I started driving Uber. So I got into the whole Uber hype, and basically it was a pretty good stable income. You know, things were going pretty well. At the same time though, of course, I had a business to build, so I was working on my business plan. So I spent about 20 hours each week driving Uber and also Lyft. And then the other 20 hours or so working on my business plan. And then December came by, and the business plan that I mentioned is Badu Tax Services LLC. That business plan, let's take it back a little bit, was built in August of 2010 when I enrolled at the U of I in Champaign. So the moment I enrolled, I started working on a business plan. I did study accounting at the U of I, and I started working with clients. I started learning how to do taxes. I started mastering my craft through YouTube videos and, you know, talking to mentors, talking to other accounting firm owners. And they taught me quite a lot about taxes. And of course, I did learn how to do taxes even more formally through my accounting education and also my CPA license. Certainly that was a big part of it. But all that to share is that I started a dream or a vision at a very, very young stage, a freshman in college. And that vision came into fruition in 2016 when I left my full-time job. So I went from college from 2010 to 2015, got a bachelor's and a master's. I was interning at PwC all of those years. And then from 2015 to 2016, I started working full-time. I didn't enjoy it, but it did teach me a lot of valuable lessons that I still take to this day. For example, client delivery and service delivery. And those are very, very valuable lessons. But basically, that business plan was being worked on in 2016. And essentially what happened with that was in December, or let's say around January of 2017, I had to make the choice. Should I go 100% into Badu Tax Services and do taxes basically? Or should I continue driving Uber to provide that stability and income? Like sometimes as entrepreneurs, we get trapped in this decision of stability. Should I keep driving Uber so I can get some stable income coming in while the client base is building up? And today I'm proud to share that we have over 2,200 clients that we work with across 36 people in our team. And we're still in all 50 states and 15 countries. But it took time to get there. It took a lot of time to build that. So basically, all that to share is that, for one, you do have to fully focus on your business. Because had I been driving for Uber in January and doing taxes, that would have took time away from my tax business. So what I did was I got rid of the Uber thing. But here's what most entrepreneurs don't do. They get rid of something, but they don't replace it with something that could potentially replace that income. So let me explain to you what I mean there. I replaced the Uber income by leasing my car to other people because I wouldn't be driving the car. I'm in the office doing taxes, and this is a home office, by the way. I've been here for 4 years now. I'm basically out, I'm doing taxes. So I don't need my car for anything really. So I found a platform called HireCar. And HireCar allowed me to lease my car on the platform. And basically with that, somebody said, it was a 2012 Mazda 3. Somebody said, you know what? I'm going to pay you $1,000 this month to drive your car. And I froze for a second. I'm like, wait a second. So you mean to tell me that you're going to lease my car? 2012 Mazda 3 was fully paid off at the time. That was the car I was using in college. You're going to lease my car, give me $1,000 while I sit in the office and do taxes? And I'm like, well, why in the world don't I have 10 more cars? And that's exactly what I did. I found the way, I leveraged credit in order to expand the operation and have, now we're at 27 cars in that car rental business. So it was a business that started out of nowhere, literally out of nowhere. And it went perfectly alongside with my tax firm, because my tax firm was my active income and my car rental business was my passive income. One thing that entrepreneurs should do is make sure you have passive income coming in. What happens when COVID-19 hits and your business can't open, right? What happens when you get sick? Or let's say that you're a woman, you get pregnant. What happens then? How can money still flow in without you as an entrepreneur being there? So for me, I knew that I needed multiple streams of income. I had a mortgage at the time. You know, I had a lot of different things, responsibilities that I had to take care of. So I needed money to come in. And as we know with business, as we're getting started, it doesn't just jump off right away. It takes time. Business takes time to build. So for me, this is what I had to do. And, you know, now we do still have the car rental company. It's since been converted into Serve Transportation, LLC. And then my real estate venture started in 2017, where I bought my first single family home. And now we're at 57 apartments, essentially. And next year we'll be expanding to 157. So we're planning to add 100 more units. So these are all different ways that you can make it as an entrepreneur. You know, with the tax firm, it didn't just go from 1 to 2,200 overnight. It actually built over time. It took a team, it took systems, it took business coaching. I'll share with you a secret. I pay $1,000 a week to get coached on my business. You know, so, but nonetheless, I just wanted to share that because I think it's always important to understand the landscape of the, you know, basically what you're getting yourself into. If you're a new entrepreneur, or if you're somebody who's keeping on with the keeping on and pushing, that's just something just to keep in mind. And the reason why I'm here today is I'm very passionate about financial literacy. In the Badu Enterprises, we also have Badu Foundation, and that is my financial literacy not-for-profit that teaches financial literacy to the homeless and the youth on different topics. So now let's get into, I'm sorry, question? So it was HyreCar, and it still exists today, HYRECAR. And then now we also use platforms like Turo. So the question was, what platform did I use to lease my first car? It was called HyreCar. And we still do use that platform, but we also have some private rentals that we do now, and then we use the Turo platform. We only used to do economy vehicles back then. Now we do some luxury vehicles. And somebody asked a question, do you coach and mentor other tax business entrepreneurs? Yes, we actually do. So feel free to reach out to me. We do have a state-of-the-art coaching program to teach folks how to build up their own accounting or a CPA or tax practice. And that's how we're able to accumulate 35 team members as well on our team in order to deliver that service to our clients. So we do it where you can either be a part of our firm, or we can teach you how to do it privately as well. But now let's talk about incorporation. So as you're thinking about starting up your tax business, as you're thinking about starting up your own retail shop, as you're thinking about, or you already are in that position, you need to incorporate yourself. And even if it's a child selling lemonade on a lemonade stand, they need to be incorporated too. Because the thing is, if that child sells lemonade and that person they sold it to somehow, some way catches COVID-19 from the lemonade, well, that child can be put in a lawsuit. And if the judge finds that child to be, you know, basically guilty of that offense, then they can take away everything, not just from the child, but also the guardian of that child. So why is it important to incorporate? Even if you're literally selling something as lemonade, which of course you can make a lot of money from doing, you know, you really have to incorporate yourself. And there's really 3 reasons why somebody would incorporate. The first one actually is it protects your personal assets. So in that lemonade scenario, If the child had the LLC and somebody sued that LLC, not the child, they can't sue the child anymore because there's the LLC, then that LLC is the one that goes to court. It is the LLC's assets that's on the line, not your personal assets. So one of the first things you should do when you get into business, and even in some of the folks in our firm, they also have their own LLCs within our already existing LLC. And you might have noticed that all my companies end with the letters LLC because that is my favorite type of entity. I'll be sharing the reasons why in a second. So that's the first reason. It is to protect your personal assets. Number two, it is to enhance your credibility. When you're doing business with somebody, it's usually best if you have a company that's representing you, because it just shows that, man, okay, it just shows that sense of seriousness. Like, wow, okay, this person is coming to me as a company as opposed to their individual name. So it just enhances that credibility. And then also you can't get things like business loans and business credit unless you do have a business entity. So you do get easier access to capital. Now there's actually only two types of entities, but one of them is broken up into two. So there's the LLC, or limited liability company, and then there's the corporation. So the LLC, it is a very, very, very good entity to have. That's what I usually recommend for anybody who's starting out in business. So your active business, let's say a tax business, or even your real estate business, let's say rental properties, it should be all done through an LLC. You do want separate LLCs for each major business. So for example, my real estate company should be nowhere tied to my tax company LLC. They're all in separate legal LLCs. So for example, Badu Investments LLC is a rental LLC. By the way, Badu Investments LLC also has subsidiaries for each property that we own within the company. And then you have the tax firm, which is in its own LLC. So LLCs I love for a few reasons. Number one, they're very easy to start and maintain. There's very little that you have to do. For me, in my world, I try to keep things simple. The simpler it can be, the better it is for me. So LLCs give you the simplicity structure. And I know with business owners, we can get a bit complicated or complex when it comes to certain things. So the more we can simplify a certain aspect of the business, the better it is for you. Trust me. I mean, I've had clients call me with like 20 different entity setups, and you know, they have all these chains, and then I'm like, but you're selling one thing. You don't need a million different entities. As you expand and grow and become like an Apple, then you may want to consider. But if you're just starting out, one LLC is fine if it's your main business. And then if you want to start expanding into maybe real estate or other types of businesses, then you form the different entities. So start it off, try to start off simple, at least in the beginning. And then with the LLC, it also enhances, essentially with that, you get personal asset protection. So nobody can sue you for your personal assets as long as you're doing everything in the name of the LLC. So meaning you're not signing documents under your name, you're signing it under the LLC's name, and then you're signing your name as the manager of the LLC or the member of the LLC. Also with LLCs, you get to choose how you want to be taxed. So basically there's 4 tax structures out there. So this will touch into the S corporation side too. There's the single member LLC or sole proprietorship, and that's a tax where you would file the Schedule C on your income tax return. So basically on your 1040, you would file a Schedule C income tax return. And with that, one of the downsides of it is you have to pay self-employment taxes at about 15%. So it's usually not an advantageous structure to have because you have to pay self-employment taxes on your profits. So if your gross income was, let's say, $100,000 and you spent, or your expenses were $25,000, well, now you're left with a profit of $75,000. So with that, you would have to pay an extra about 15% on that $75,000. And I haven't met anybody on this planet who likes to pay more taxes than they should. So that's something to take note of. So with the LLC tax as a single member LLC or sole proprietorship, it's usually not advantageous if you're in an active business, like a tax firm, for example. And then there's also the partnership. Partnership is basically a sole proprietorship that has multiple people, 2 or more people. With that, you would file the 1065 partnership business tax return. And on top of that, it generates a K-1 that gets attached to your personal tax return, your 1040. With that, you still pay self-employment taxes on any profits of the company. The next one is S Corporation. With S Corporation, it is the most tax advantageous entity out there. With this one, you're not paying any self-employment taxes, so you get rid of the FICA, but you do have to run a small salary or a small W-2 payroll, typically at 25% of your profit, and that amount is the amount that gets subject to the 15% FICA. So a strategy that we usually put in place for our clients is we lower the salary, the W-2 requirement, down to 25%, and then the other 75% of the profit, we run it through a distribution where it's not subject to any FICA or self-employment taxes. So moving along with that, S Corp is very, very advantageous. So if you're a small business owner and you have an active business and it's profitable, then an S Corporation is usually the better choice to make. Then you have a C Corporation. So with an S Corp, you only pay one tax really. You only pay taxes on your profits. With a C Corp, not only do you pay taxes on your profits, but you also pay taxes on any distributions of those profits. So C Corps are usually strongly not recommended because there's double taxation. So let's say you have this company that grosses $100,000, you spend $25,000, and then the profit is $75,000. Well, you not only have to pay taxes on the $75,000, but you also have to pay taxes on any money you send to yourself in the form of a distribution. So that's what you call double taxation, and it's typically at about 15%. So the taxes can look really ugly on C Corp. So I tell my clients, do not elect the C Corp because it doesn't have tax advantages. You might be wondering, why in the world would somebody choose a C Corp over an S Corp then? Well, for one, C Corps are for larger companies like Apple, Microsoft. Those are all C corporations, because in order to go public, you have to be a C Corp. So basically, with the S Corp, it's known as a pass-through entity, meaning stuff comes to your personal tax return. With a C Corporation, it is not a pass-through entity, so everything stays on a business tax return, and essentially it keeps things separate. So the SEC requires that if you want to become public, you have to be a C corporation. So only big companies should be C corporations typically. So I know that was a lot that was covered. I would like to maybe take a few minutes to see if there's any questions on the incorporation side before we actually get to the tax side. Let's see. Let me actually do a stop share really quick. All right, let's see if there's any questions. All right, last call for questions before we go to the next one. Yes, sir. Yeah, so that one would be an LLC. So the question, for those that didn't hear the question, basically it's what would be the ideal structure to use for a rental property? And it would be an LLC. So basically an LLC that's taxed as a sole proprietor, because rental properties don't have self-employment tax since it's passive income. So self-employment tax is only for active income. And alongside with that, there's another follow-up question. Are there any benefits to having a sole prop? Absolutely not. Nobody on this call today should be a sole proprietor. Nobody. It is very, very dangerous, and it has zero benefits. Maybe one benefit is that it doesn't cost a lot, but believe it or not, it's actually, to my knowledge, the fee, it's basically the same fee to start a sole proprietorship in the state of Illinois as it is to start an LLC, at least last I checked. So it doesn't really save you anything either. But what you can save is the headache and the exposure by electing to be taxed as an S corporation. I'm sorry, by having an LLC And then at a later time, it could make sense to elect to be taxed as an S corporation. So remember, LLCs have the right to be taxed as an S corporation, and then corporations also have the right to be taxed as an S corporation. So to answer the question again, it is LLC that should be holding your real estate. Yes, I'm Amy. Yeah, that's a great question. So the question was, if it's a short-term rental versus a long-term rental, does it change the whole active versus passive thing, or, LLC versus S corp thing? And I would say not. So if it's only like one, if it's one like active, if it's one Airbnb, for example, then no, you don't. It doesn't consider you active at that point. It's really when you have maybe three or more. So typically 3 or more is the rule that we use. So once you approach 3 or more, then you probably want to become an, basically an LLC that's taxed as an S corp. But here's a bonus for the day. You actually don't have to, because of the thing called depreciation. Depreciation is the automatic tax deduction that you get for your rental property. And usually we can find a good lump chunk of depreciation if we do a cost segregation study that can help wipe out any profits from that. So you don't really have to, but if it really makes sense and you're consistently generating a profit on your short-term rental to a sizable amount, then yeah, by all means, we should probably look into the S corporation structure. All right, and then another question here is, if you already register your LLC but then opt in as a corporation, can you go back and do so? Short answer is yes. It requires a special election, which we can certainly help you with that as well. And the name of the form, by the way, is called the 2553 S Corp election form. Please do not try it at home. I have seen a lot of mistakes done on that form. Sometimes IRS will send it back to you and say, hey, this is not filled out correctly, we've denied it, when a few words could have been put on the paper to allow you to have your S Corp. Another question is, when do you know to elect to be taxed as an S Corp? Great question. It's when your net profit is $30,000 or more. So if your income, let's say it's $100,000 and your expenses are $70,000, so income minus expenses equals profit. So 100,000 minus 70,000 equals 30,000. At that point, you're probably better off as an S corp. And so basically, and you can always make a late election. We literally have had clients where we went into tax season and we got them their S corp going. And then the question is, which entity is better for investing in stocks, Bitcoin, and Forex? Honestly, that all depends. Like if you're an active trader, definitely an S corp. Like if you're in it every single day and you're trading every single day, then definitely S corp. But if it's maybe like a hobby or something on the side, then you don't necessarily need an entity, because, I mean, not to say, but nobody's really going to sue you by buying a stock on your own, right? It's the reason why we have entities is so that you can be protected legally. It does come with some tax benefits, but you don't necessarily have to when you're just buying stocks, for example. So let's move on really quick to the next slide. Remember, we will save a few minutes at the end for some Q&A. But let's talk about taxes now. So before we can go into the taxes, we need to talk about the corporations or the incorporation, because that will basically set the landscape for how our taxes are going to be. So the reason why you should file taxes is that you earn an income. So here's what happens. Let's say that you received a 1099 or you work somewhere and you know that they're usually sending you 1099s, but you decided you don't want to file for whatever reason. It could be COVID related. So you go ahead into tax season and you say, oh yeah, I'll get to it eventually. What happens is that the IRS will send you a letter saying, hey, by the way, you haven't filed your taxes this year. Please file. That's basically a small, that's just a small sort of, I wouldn't even call it a warning. That's just a common courtesy from the IRS. So at that stage, you're not really in trouble with the IRS. But after that, though, let's say they give you 30 days. Or actually, in this case, they usually give you about 90 days to file. So let's say you don't file in the 90 days. You say, oh yeah, forget it, screw the IRS, I don't even know who they are. You decide to, you don't file. What happens then is the IRS will send you a proposed letter proposing how much you owe. And you basically have to either contest that or you have to file or pay that within 30 days. And then if you don't pay it, if you don't take any action whatsoever, even after that, then they start putting you in collections, judgments, liens. They can seize cars, they can seize assets, they can seize almost anything. So you really have to be careful when it comes to the IRS. But the reason why we file in general, tax preparation, the reason why we offer it as a service is to help you stay compliant with tax laws and regulations. Everyone has to file annually, but some people might have to make quarterly estimated tax payments. So it's not a filing, it's simply an advance payment to the IRS that you're making, just like let's say your W-2, just like how they take from your paychecks. It's kind of the same concept, except now you have control over when to send it and how much to send. So you typically do have to make quarterly estimated tax payments if you're an active business owner. And then when you file your taxes, you can also get a tax refund. So you can't receive a refund when you file your taxes because you overpaid. A tax refund is nothing more than you overpaying, and then they're refunding you the money because you overpaid. Basically, you've paid more than your fair share, essentially. And by the way, I do have some clients that effectively pay $0 in income taxes by utilizing different tax strategies. So that's where our next service comes in, and that's tax planning, which allows you to capture all your write-offs and also just different strategies to help you minimize your taxes. So now this is more on the planning side. But so with taxes, as a business owner, you basically can deduct everything. And when I say everything, I literally mean everything. There's only a few things that I can think of. I can literally count on my hand just a few things. Like one hand I can count on just a few things that you cannot deduct. One of them is like parking tickets, anything that's like penalty related. You cannot deduct federal taxes paid. You can no longer deduct entertainment. However, we simply call it advertising because, that's a part of you getting more clients. Usually when you're entertaining a client, you're trying to attract that client into becoming a client, or you're building trust and rapport with that client. So the reason for you to even have that entertainment is to maintain that relationship with the client. So typically we categorize that now as advertising. In order for something to be legally tax deductible or a business expense, remember a business expense is not money you receive from the IRS. It's simply a reduction of your gross income. So let's say your gross income is $100,000 and you have write-offs or business expenses of $25,000. Then it reduces your taxable income down from $100,000 to $75,000. So the $25,000 is reducing the $100,000 down to $75,000, and that's the amount that you have to pay taxes on. And then there's a tax rate that gets applied to it, let's say 20%, and that's your fair share of taxes due to the IRS. Now, if you're a savvy individual, or if you're working with a tax professional, you can use things like accelerated depreciation in order to help wipe out your taxable income so that your net tax due is zero. I work with a lot of real estate agents, a lot of realtors, and I would say a good chunk don't pay any income taxes. Due to these strategies. They consistently buy properties, they're always out there buying, and so they end up not having to pay taxes because of the accelerated depreciation benefit. And once again, depreciation is simply an automatic tax deduction that you get on your purchase. So if you buy a building, let's say for $100,000, then you get an automatic tax deduction of $100,000 divided by 27.5 every single year. In some cases, though, you can accelerate it. You can get a faster deduction. Instead of 27.5, you can do that over a shorter period of time through what's called cost segregation. And that's something that we assist with as well. But basically, In order for something to be considered deductible, it has to be first ordinary and necessary. Ordinary simply means it's very ordinary for, a tax firm to have a tax software. It's also very ordinary for an accountant to do, to have a computer, for example. But the necessary means it is extremely necessary for me to have a cell phone. It is extremely necessary for me to have an Apple Watch. And it is utmost necessary for a global company to be able to take trips each year to nice places that we may potentially expand our real estate venture to. So these include meals. So anytime you're eating with somebody and you're discussing business, that's a tax deduction. Travel. So even out of town travel, as somebody with a business entity, you're allowed to have up to 4 board meetings a year, anywhere you want. It can be in good old Chicago, where I am, basically where we're based, or it can be somewhere fancy like the Bahamas. It can be the Caribbeans. It can be anywhere really. So usually, and we get deeper into that usually during our tax planning discussions, but you can deduct travel as an ordinary and necessary business expense. Fees, if you pay license fees, those are deductible. Dues, so if you have different like professional memberships, then those are deductible. So you can get pretty creative with the write-offs, right? Anything that's related to your business is typically a tax deduction. Miles that you travel to and from your rental property, that's a tax deduction. And then retirement savings. So typically business owners are in the best position to save for retirement. We just have a higher limit on retirement. So for example, you have accounts such as the SEP IRA or Simplified Employee Pension Plan, and that allows you to save over $50,000 a year, as opposed to somebody who has a W-2 who can only save $19,500 or $19,500. So you get more access usually to the retirement savings as a business owner, and you can deduct some of it, but I do strongly recommend you go the after-tax method when it comes to retirement. So we do have a quick question here. It says, can you define accelerated depreciation? I believe I explained that, but if you do have any further questions about it, I can certainly answer it. Basically, it's you speeding up the depreciation deduction that you claim on your tax return. Instead of 27.5 years of the automatic deduction, you can possibly do it over 5 years, for example, or 10 years, right? You can accelerate the tax write-off that you get on your properties, essentially. And then another question is, do you have to have a receipt for the tax deduction? That's a great question. Yes, you should keep the receipts. You should. You don't have to in order to deduct it or get the tax deduction, but you should, because the IRS can always audit you and request that receipt. So you should keep it. All you got to do is take a picture of it, and then you can toss the original receipt and just create a folder, stay organized with it, and make sure that everything is nice and neatly organized. I know it's not the easiest habit to get used to, but it should be a habit that you do get used to nonetheless. It can save you quite a lot of trouble in the tax process. And then another question, have you read Tax-Free Wealth? Yes, I have. I love that book. It's written by one of my mentors, Tom Wheelwright. And so that's one of my favorite books. And then Sandy Botkin's book, not exactly sure what the name is of the book. I probably have read it, but I might not be too familiar with the author. And then moving on, also home office. So a lot of people nowadays operate out of their homes. So you can get a deduction for that using the simplified method or the regular method. The simplified method is you simply take $5 and you multiply it by the square footage of your office space. So if it's 100 square feet, then you do 100 times 5, which is $500 as a tax deduction. Usually it's best for those who own the home to do the simplified method. And then the regular method is you take the square footage of the office as a percentage of the entire apartment, and then you multiply it by your individual expenses such as rent, utilities, cable, things of that nature. Basically, you're doing an allocation for those, and that's usually best for those who rent, who don't get any sort of deduction on their personal tax return or their Schedule A itemized deductions, to be exact. Next is health insurance premiums. Those are fully tax deductible as a business owner, as long as it's not paid by like an employer or something like that. Like if you have a W-2 job that's already paying for the health insurance, you cannot also then go ahead and deduct it on your business tax return. One half of the self-employment tax. So I did mention earlier that it's 15%. With this one half deduction, it ultimately comes down, when it's all said and done, you run the numbers, you effectively pay 10% in self-employment tax by not being an S Corp, essentially. So the self-employment tax is the tax that's assessed on a Schedule C or a sole proprietor, or somebody who's an LLC taxed as a single member LLC sole proprietor. And that's where you get hit with the 15%, but you get to deduct part of it. So effectively, you're really only paying about 10%. Not, as a matter of fact, let me replace the word only with you're paying 10%, but you can avoid it by just electing an S Corp. Now, how do you keep track of all this stuff? Strongly recommend you use QuickBooks. QuickBooks is an accounting software that allows you to automatically download and categorize transactions, participate in online billing, create professional looking invoices and estimates. You can also upload receipts through your phone, so they do have a mobile app. And then you can create customized financial reports as well as tracking inventory. So it is a state-of-the-art software when it comes to tracking. There are others out there, but I can tell you QuickBooks from experience is the best one to get everything you need done. The pros are that it is a full-blown accounting software and it has a professional look and feel. It is ranked each year as the best software in the industry for small businesses. And then there's usually plenty of discounts offered if you're working with somebody like myself who's a certified QuickBooks Pro advisor. Ironically, I also full disclosure, I also sit on the council of QuickBooks where I make recommendations as far as the software itself. So I help improve the software. And with that, it's actually my last year on the council. I only have a 2-year maximum term. So my last term is up. And with that, basically, we pass it to new council members to give recommendations about the software. So I know a lot of the ins and outs. I know about the development and all the challenges that they've had to go through just to get it to where it is now. And it's truly, truly beneficial. Another thing is it does save business owners a ton of time. Ton of time. One of the cons is that it does require some training. So since it is a pretty extensive software, it does require some training to get used to that. So with that being said, that's the presentation. I promised we would be done by 12:50. Now we're at 12:51, so my apologies for going 1 minute over. I'll leave my contact information on the Zoom, but I'll also mention it for those that don't have it. Email address is jb@badutaxservices.com. Once again, jb@badutaxservices.com. And the phone number is 773-679-7198. Once again, 773-679-7198. For those that are curious about the QuickBooks thing, Intuit actually has their own board, and they choose their own board members, basically, or they choose their own council members. So it's one of those where it expires automatically after 2 years. So with that being said, let me do one quick plug. Tonight we are doing another event on the same Zoom platform. It's called Infinite Expansion, how to infinitely expand your vision of abundance. And with that, basically, I'm sharing about the 12 steps to creating abundance in your life. So it's a book about my purpose. Part of my purpose is, just helping people live abundantly, live a better lifestyle and everything like that. So that's from 6 to 6:30 Central tonight. It's via Zoom. And if you're interested in getting more, get the link, or if you don't have the link, just shoot me an email, shoot me a message. I'll send that to you. But that's from 6 to 6:30 tonight. We'll be going live on Zoom. So we won't be on Facebook or Instagram this time. This one will actually be directly on Zoom because we like to keep it more private. But with that being said, we'd love to open up the floor for any questions. I already see one, so let me get to that one. Question was, you recommend an LLC to be taxed as an S Corp to save on self-employment and Social Security taxes? Yes, that is correct. You should have an LLC taxed as an S Corp if you want to avoid the 15% self-employment tax or the FICA tax. And that's more for your active businesses. So that's more for, let's say, you are a real estate agent, or you are a tax preparer, or you're a consultant, you know, you're a, you run a, I mean, whatever, like active, you're a law firm, for example. However, if you are a real estate investor who invests in rental properties, then you don't need to go that S Corp route. You can stay a single member LLC and just keep at it. Right. So, and by the way, I do want to thank you guys for joining us today. Hopefully you guys gained some valuable info. We got about 7 more minutes, so you can feel free to ask your questions. I have another question here, and is there a location you would use to start an LLC such as Wyoming? To be 100% transparent, you don't have to go that route. Now, if you run an online business though, then you might want to consider a state that does not have an income tax, such as Texas, you know, such as Nevada. So for tax purposes, it could make sense. But if you know that you are a brick and mortar, if you know that you do all your operations in a particular state, then you're not going to get the benefit of a no tax state, because you are taxed where you're quote unquote physically present. And an online company, you're not really physically present anywhere. You're physically present online. You can choose where you want to be physically present. So one of the tax strategies that we can implement is having you taxed in a different state if you're like more online. So that's just something to keep in mind. And there was a question about the Zoom link for tonight. It's the same Zoom link we're on right now, like the same exact Zoom link. So it is the, let me see if I can mention the code. Yes, it's this Zoom link right here that we're using right now, the 663-397-4055 ID. And if you, so let me go ahead and give me 1 second. So yeah, same Zoom link basically, no different than what we're on right now. And then another question is, so for a rental property that's located in Chicago, the LLC should be based in Illinois. Yes, it should. It definitely should, because you're going to be paying taxes to the state of Illinois, not Nevada or Wyoming, because that's where the property is earning the income. You usually pay taxes where you're physically earning the income. So remember, for an online company, you're not physically earning income anywhere. You're earning it in the cloud, you know, basically in the virtual world. So, and I know a lot of employers are going to have to face some battles, or they probably are right now with COVID-19 and people being like remote. So there's a lot of debates about that. But as far as incorporation, if it's somewhere where you know you'll be doing business physically, or like you'll be meeting with clients in that state, and most of the stuff will be done there, just go ahead and save yourself the headache and, you know, register in that state. Because if you're registered in Wyoming and they find out that you're doing business in Illinois, all your stuff is done in Illinois, well, now you have to register in Illinois. You could face a penalty. They could possibly delist your business for violation of the Illinois Business Code. Basically, you cannot do business in the state of Illinois if you're physically present here unless you're registered, if you have a certain amount of hours, or, you know, there's certain requirements when it comes to that. So, and that's another reason why you guys should be incorporated, because technically you can't be working with clients if you don't have a business. So just something to note there. With that being said, any other questions? We got about 3 more minutes left here. Any other questions or anything? Let's see. And then what I'm also doing here is I'm leaving my contact info in the chat in case you weren't able to get it. But we'll do about last call for questions. We'll do about 1 more minute for questions. And thank you guys once again for being a part of this. Hopefully you gained some value out of it. And also tonight, it is a presentation on my purpose, and it's called Infinite Expansion, How to Infinitely Expand Your Vision of Abundance. It's from 6 to 6:30 Central tonight. Same Zoom link that we're on now. And I guess let me just go ahead and say the code. 663-397-4055. 663-397-4055. The same one that we're on right now for those on Zoom. So you literally click the link at 6 o'clock, and then boom, you're in the meeting room. So just good to note there. And yeah, absolutely. So with that being said, let me go ahead and adjourn the presentation and also stop the recording. So thank you guys once again for being a part of this. Hopefully you benefited, and hopefully we'll be in touch sometime. See you guys.